So we'll do things a little bit different tonight. We're not gonna do live trading because I noticed that a lot of folks are having trouble with just the basics, right? So we're gonna cover the KPIs. Yeah, get rid of the volume. Save this. Okay, so this is an hourly chart, H1, and I have here Aussie CAD. So when you're first looking at this, let's have you pick out what do you think is the KPI first? You want to draw on a chart with your annotate?
Yeah. Let's see.
I'm not seeing your annotations.
I'm thinking, don't rush me.
Okay. It shouldn't be like you have to think about it. It should be what is your first intuition? Let me ask that.
My first intuition would be up here, kind of where price is already at.
There's going to be two KPIs that you want to look for. Okay. So I'm going to add pivots to make it easier for you. It's toolbox, no. So pivots. Now, what's your, is it the same intuition by seeing those pivots?
Yeah, probably.
Okay. So the first KPI that you should recognize at the top.
Okay.
Okay. The second would be probably here that you marked.
Hmm.
The only issue is we have
Yeah.
faked out, broken it, came back, bounce. So is this really the KPI or do you want to put this one? And
Yeah.
it's a little fuzzy, but I would say the next KPI is actually this one.
Yeah. Yeah.
Okay. Why? Because this one is fresh.
Hmm.
It's only been touched once. Whereas this one's been one, two, three, been passed through, passed through, passed through, four.
Hmm.
It's not fresh.
Yeah. I
Makes sense?
agree.
So
Yeah.
this one is not the best KPI.
Hmm.
Does that make sense?
Yeah, that makes sense.
Okay, and obviously this one is the top means because it's gonna break that range. So that this one, did you see this one? The top.
Yeah. Yeah,
Okay.
yeah.
So that's probably the easier one, right?
Yeah, that's the easier one.
Okay, so now let's widen it out. And pretty much you see the same thing. But on H4, well, ugh, come on, really? Why is it not loading? I think I have to reload. Oops. Give me a second. Let me switch to meta quotes. Maybe that might give more data. So slow. What the heck is going on? Ah, sorry, I have to restart. I figured.
Okay.
Usually it when it's not cooperating like that, it means I have to update. I normally trade in a different one, so I
Mm.
only use this one to do class and test out my EA stuff. Let's give it a minute. All right, there's the bear. Okay, so do you see how here's the top of the range? It's also the bounce point.
Yeah.
Okay. And yes, this is a KPI, but it's too far away. It's so the closest one is this and this.
Mm.
Let's oof, see here. Oops, deleted the wrong one. And so this would be the KPI. And then this is where I want you to realize that there's different time frames. Okay. So as far as swing traders, right? Swing is usually there's different levels of swing, right? There's daily. So they're gonna be a D1, H4, H1 majority of the times, right? Now there's an hourly swing, which is going to probably be H4, H1, M15. They might go down to M5. So Kevin uh, is a swing trader, and he mostly does an hourly. Rex tends to be daily. And then there's Scalper. So this is hourly, and this is daily. Okay.
Mhm.
And there are scalpers like David and us, right?
Mhm.
Which we're probably in the M15, M5, and M1s. Now we do have to watch H1s, okay, to pay attention to structure. Okay, so if you're watching an hourly chart like this, the KPI is still the same, but these are hourly and they're more towards the swing traders. Does that make
Mm.
sense?
Mhm.
So these are your major points where swing traders, hourly traders basically, come into the market and they say, oh, look, hey, it's hit my KPI for buys. So even though market fell like, what, some right here, 93 pips, 98, 100 pips, guess what? It's going to have a hard time breaking.
Mhm.
Does that make sense?
Yeah.
Oops. Because swing traders are coming into the market and says, this has reached the level I want to buy
Mhm.
because this is 100 pips. So when they're buying here and it goes up to here, that's very profitable for them.
Mhm.
Does that make sense?
Mhm.
And the majority of traders, institutional traders, are daily and hourly. So if you, as a scalper, are trying to counter that, you're going to have a hard time. Does that make sense? Because as
Yeah.
a scalper, we are not driving in a volume that if you think, oh, this is going to break down and you are selling and the swing traders are buying, guess what? It's going up. Does that make sense?
Mhm.
Okay, so now if you know that, as far as the posing sides to the market, right? Let's drill down and say, well, if you recognize these KPIs right here, where is your short-term KPIs?
Mm.
So the yellow is the hourly and even the daily, right?
Mhm.
It should be first, like, yeah.
Mhm.
And where's the next one? Exactly. So those two are your KPIs because if it breaks this right here, we're going here.
Mhm.
There's nothing in between. Does it make sense? Yeah, there's these pivots, it's bounced before, but it's not fresh. And for the market to stretch to here is not hard.
Mhm.
Because if you look, this is 5 pips, this is another 5 pips. Does that
Mhm.
make sense? So if the
Mhm.
market breaks this KPI on the bottom, it's probably going to go here.
Mhm.
Does that make sense?
Yeah.
And if it breaks this one at the top, look, there's like nothing in between. It's
Mhm.
probably going to go at least 16 right here, right?
Mhm.
Because this is your resistance. This was your range. And it could go all the way to here. Does that make sense?
Mhm.
So when
Mhm.
it breaks this, it's going to go here first, probably bounce or even just continue up. Yes, this could be, but it's not really KPI. It's a bounce point. The true KPI is right here. It's only 8 pips away. So when you're thinking about KPIs, you need to think in extremes.
Oh,
Okay.
right. I thought we were doing resistance. Sorry.
Okay. So as far as KPIs, yes, this one's good. Okay. And this one's good. Okay. So if the market right now we're 50-50, because is this a flag or is this the turn?
Mhm.
Right? We don't know yet. So this right here is a 50-50, but because this is nighttime trading, this dropped flagged kind of thing, more likely here. So the probability is more like this, that it's gonna drop. Does that make sense? During the
Mhm.
day, when there's volatility and there's people, hey, I want to buy, I want to sell kind of thing, then this is during the day. The day has a more probability to go up, reverse, right? But not at night. So you need to know the context of your trades. At nighttime, the probability is higher for continuation. Does that make sense?
Mhm.
Okay, so what I would do, the way I would trade, I would be light here in case it turns, and I would go heavy here. Isn't that how David trades? Okay, for him, he might be still like light here, heavy here, up here. Why? Because this is the best place for sells. So he would probably be heavier here and light here. And I agree with him right here that light, because it could turn, but the way I would load, I load based on probabilities. So right here, there's probability of it turning. Here, the higher probability to reach the bottom. So
Mhm.
then I load heavy here. Some people see it as a higher risk, but I see it as high risk, high reward. Does that make sense?
Yes.
Okay. So your KPIs on the top side for you would be this one, but it's too far. It's too far. Okay. So the true KPI is this one, and then your bounce point is this one. This is your first bounce point. Okay. Is this making sense?
Mhm.
All right. And the other what you can do is fib. If you fib this, then it makes total sense because look, this is 62. So it might go past this a little bit and come back. And it might even go to 78 right here. And come back. Because if it goes all the way to 100, it's probably going to go to here.
Mhm. Mhm.
Because this move right here is so small compared to this that it's more likely to go all the way. Would it break this? Probably not. It might go down like this, and then it could come up to here. Does that make sense?
Yes.
But your biggest, like you said, it's like um, it's just intuition. What are your first instincts? And the way to look for KPIs is to look for consolidation. Okay, and I learned this in OTA, Online Trading Academy, which is crazy more expensive, by the way. Because look, this is consolidation. is also is where your next breakouts are. Does that make sense?
Yes.
Okay, so now let's go to a different pair in practice.
Hey, Duke, before you get off that pair, can we go back there for a minute?
Sure.
Because one of the things I was looking at is risk to reward. It's more rewarding to buy than it is to sell, because if you're selling at the bottom or at the top and it breaks up, you got a long ways to go before your next fixed point. But if you're buying, it's not too far down to your next fixed point.
Yeah, you're right. And that's where David, he would probably be buying as well. But keep in mind the fractal, which is that if it breaks this, your break point is probably more like this. So it's not that you have, let's say, 24 pips, but it could be more like this. As far as an hourly swing. Now if you go to the 15 and then you could say it's, yes, it breaks this. It could go to here, so like right here, 17, 42. But you realize, it could go all the way right here, 70 pips before it bounces. Okay.
Yeah, that's true.
Oh, interesting. I was in sales. I had entered some test trades and I didn't even realize it. Now I'm like, what the heck is this? Why am I up? Let me close these trades real quick.
They're doing very well.
So if you can withstand the drawdown, then yes, buys is the better as far as the come on, risk to reward, because your risk, if you spread it out, your risk could be lower for continuation, right? So the reward as far as longer term is higher. Okay, so as far as a swing trader, yes, they would be buying down here. Does it make sense? But it could go against them. And so that's where the typical market trap is that, hey, people buy here, and guess what? Institutions push down. If people are buying, institutions are selling and selling. And then right here is where it bounces. Does that make sense?
Yes.
Yep.
Okay, so you want to be aware of the market traps, which is, yes, buys right here is a good risk to reward, but you got to take note of what's happening. You can't just, say, oh, technical analysis says I should buy. Yeah, but read what the market is doing, because technical analysis will give you some edge that maybe 80% of the time works, but there's that 20% of the time when market is irrational. Okay, because there's like that W. It's like, oh, market's going up. That's 80% of the time. And then what happens? That 20% of the time where it just rejects. Does that make sense? Okay. So the point is, right now, the risk to reward as far as easiness is self, because we're also in a nighttime market, which means if you sell right here and this is a nighttime drift, it could easily come to here before it stops. Does that make sense? So if you are trying to buy at night and it's going down, you're going to have a hard time. So you need to understand the context of when you trade. If this was during the day, I absolutely agree with you. Buys is a better opportunity, but not at night. Not at night. The nighttime right now, the control factor here is sells. Is this making sense? Okay. And because this is touched so many times on the bottom, it's more likely to break and kind of do this. Okay. I don't know as far as what the market will do, but I'm just saying, as far as a probability, this is what I think it might do. We cannot forecast the market. We have to watch what it's actually doing. Forecasting will get you in trouble. Okay. All right, so let's go with a different pair. So now this is hourly chart. What's your KPI? There's two KPIs that you have to find.
You have the one at the top. Where's my sheet? Do you always do the very tip top, or do you?
KPIs are your extremes.
Okay, then
That's when it really breaks, right? It becomes an OSR. So
and then,
that one, yeah, you could do this one, you know,
yeah,
but it's so close that see, it's only 17.
mhm,
So yes, it could bounce right here, you know, but that is like after this top one, you don't want to be selling because it already broke. It could fake out, but if it doesn't come back in, then it's not coming back, you know.
and then I'd probably draw the other one.
And where's the bottom one?
I'd probably draw like this.
Yeah, I would agree with that. Okay, so the KPI on the bottom side would be right here, and you could stretch it to probably here or even here.
Yeah, I see that.
Okay, why? Because this is a bounce point. It's bounced several times. This is fresh.
Mm-hmm.
So the better KPI is this one right here, and these are pretty far up here. Okay.
Yeah.
You want to look at what I call freshness, which is how often is it touching. The more often it touches, it's probably not your KPI anymore because it's gonna blow through.
Mm.
Does that make sense? It's a bounce point, yes, but look how often it's been here. This right here is really actually the KPI. I mean, you're close, and yes, you're correct, because let's drill down. Okay. So I'm gonna mark it like the streams in red. So this one's extreme, and this top one is extreme. Whoops. Oh, I guess it's right. And then you had marked this one, which it's valid, you know, but look how many times it's bounced. 1, 2, 3, 4, 5, 6. It's close. So really, at the moment, if it breaks right here, you could call it a KPI for the minutely, for the scalps.
Yeah.
Okay, but not for the hour. So if it breaks this level, you don't want to be buying. You want to be selling because there's nothing here. There's no bounce point. Does that make sense?
Yeah.
So if it goes down here, you want to actually load up heavier in sells, because what the market will do is that people are seeing this to break. They want to take it down to here, especially at nighttime as well. So right now, I would be selling right here because it's failing to break on the upside. Look at how many times it touched. It tried to do this, a higher high, right? Kind of did the W, right? And failed. See? So that right there is, to me, is a key indicator when structure fails. When it's supposed to be doing something, like right here, you see the W with the pivots. You see that with the pivots right here? It was supposed to be a W. And what happened? It became an M. It did it again. What's supposed to be a W? What happened? It's an M right now. So
Mhm.
I would be selling right here, like wait for kind of this, or maybe load light. If it breaks, then wait for the pullback, load heavier a little bit. If it stays out, start building a second position kind of thing, and then ride it down here.
Mhm.
Does that make sense? Because
Yeah.
this right here, right now, is a 0, 1, but look how often it's touched this. So the point is that it might do this and just pass through.
Mhm. Mhm.
And it becomes a ride the wave situation where it doesn't need 0, it doesn't need 1, it doesn't need 2 or stuff like that. It just blows past it. Okay.
Mhm.
So as far as the scalping KPI, it's this and this.
Okay.
Well, let me switch colors. Um, is this clearer now? Like you're getting better idea?
Yeah, I think so. I think what was confusing was like when we were going through the exercise that day. Um, I don't have that chart obviously, but it he drew like where I thought, well, I was wrong at first because I drew it too high, like something like that. But then I feel like you and him drew it somewhere like here, which was just like not a place that felt like obvious to me. Like I totally could say it was in this area, but like I think on that specific chart, the difference between those two lines was not like a trivial distance. I feel like it was like 30 pips or something. And so that was like conceptually it felt okay, but like being wrong by 30 pips felt too big. Like it felt dangerous to not be able to draw the exact line that he drew. But so far, like the examples that we've done have been pretty clear to me. Like I would draw them pretty similarly, and I see the rationale that you have for
Well,
like this one. That makes sense to me too.
let's backtrack, okay? And then let's clear the charts. So I'm gonna block off um the this right here. Where would you draw the KPI then?
I would draw the upper one up here.
Yeah,
Draw,
great. Because then it's an outside range.
yeah, that
Bottom
break.
side.
Bottom side, I'd probably put it at this low.
Yeah.
Like you said about the freshest thing.
Right.
I mean, I'd be tempted here
So
with more
what
touch
happened?
points, but since we already broke it, I feel like it just make more sense to have it down here.
Exactly. And that's the same situation. So what happened on that day is that a lot of folks were saying this is the KPI.
I see. I see.
See,
Yeah, that's a confusing
a lot
part
of
too.
folks were saying this was it.
Yeah.
It's just the bounce point. It's not it.
Yeah,
It's
yeah. And
so if
like
you
what's
drew the
also
KPI right here,
kind of confusing is that like this level, like I would say if price got on the other side of it, I would expect it to come down and come down to here.
yeah.
But I don't know, like, so so I guess it's a little confusing to say. I mean, if price crosses this one, I definitely would say I should be in sells to come
Yes.
down pretty far.
This
But
is 50%.
yeah,
So in a way, it's a KPI because it's coming to here, but it doesn't mean that the market is going down.
I see, because it could bounce there.
It could bounce, exactly. So that's
Okay.
why it's not the KPI. Yes, you have your short term as
Mhm.
far as a scalp, you want to sell up to this point, but you don't know that it's going to break. Is
Yeah,
this
true.
KPI? And they could bounce and could be a flag and just continue all the way up. But knowing that, right?
Mhm.
Then you see what happened, which is right here. You see how it came to here and it just passed through it.
hmm
That's when you know that's your KPI. You got to get out of your buys because look, retest of it, and then it just dropped. It never came back.
Yeah.
Is it making clearer now?
Yeah, that's a good point.
Okay, so that's what he was trying to say. Here's a bounce point versus here's your KPI. And this was it right here.
Hmm. Okay.
It's also the freshness of it. Go ahead. You got a question?
Well, I was just wondering, because Nick's working through the KPI issues. Nick, how do you define a KPI? Like, what is the KPI? Or what does that mean?
Yeah. So I think that is a little bit of my trouble, but my working definition right now would be where you would want to switch your bias. So like in his example a second ago where it was all blacked out, I would say we were headed up. So my bias would kind of be with the trend up, and I'd be thinking we could bounce at the top, um, but we could break out, and then risk versus reward would be dangerous to be against the to be selling really when you're that close to the breakout. So my bias would probably be buys, and then so I was defining a KPI as a place where I shouldn't be in. Being in buys would be like a bad idea at that point.
Exactly. So it's where your bias changes, right?
Mm-hmm.
Where the market bias changes. It's the key price indicator, right? Or index, whatever you want to call it. Because if you think about how market moves, people are buying. Why? Because they want to be able to cash out at a higher level, right? And people are selling because they think the market should go down. So if you are buying up here, that's because you think it's going to break up. Does it make
Yeah,
sense?
yeah, yeah.
But it's no one knows, okay, what the market will do because the market is based on volume of traders. Okay, so the sells right here is greater than the buys, which drives the market down. Because if you're up here and you're thinking it's overbought, you're selling and then saying, oh, look, this is a great place to cash out and take my profits. Does it make sense?
Yeah.
And then what happens is where you take profits on one side is also where it flips because your momentum that was going down so fast is now slowing down and then ranging now. And then, oh, it's not dropping. Let me buy. Does it make sense?
Yeah.
Okay. And see how this one just passed this. It did the 2, the 0, 1, 2 right there. See?
Mm-hmm.
So hopefully this is making it clear. And now let's go with a different pair. I'm trying to pick pairs that y'all normally don't see in trade.
Yeah.
Okay. So on hourly, what's your KPI here?
Oh, wow, this looks so similar to the, the last one.
It's similar, but there's subtle differences, you know.
Yeah, but I'd probably draw it up at the top again. Well, actually, I think I would probably draw it here,
That's fine.
and then I draw the other one. Probably actually draw it here. Just feel like if we were I mean, intuition wise, I feel like if we were on the other side of those lines, we're probably we might come back and bounce, but I'd more be
This is
expecting a
where
bounce.
look for the extremes again, right? Because here's your trend line. You see
Yeah.
past the trend line already.
Mm-hmm.
We could still bounce. So what you drew is a bounce point, okay? But market's not coming back when it passes that one.
Oh yeah, yeah.
Okay. Because if you look at it, this is also your next support. So what is happening is saying, okay, this one is being negated, right? It's not bouncing. Where's your next support? Well, this is it.
Yeah.
Okay, so if the market comes down to here and it doesn't bounce, guess what? It's going all the way down to here. Is it making sense?
Yes, that does make
Okay.
sense.
So another way for looking at KPIs, okay, is to look at support and resistance and say, where's your next one? Not the current one. This right now is the current support.
Mhm.
Does it make sense?
Yeah.
So this is your bounce point. This is where you say, hey, danger, danger. But your real next one is this one. You got to think a little bit more extreme as far as
Mhm.
KPIs. Is
Okay.
making sense?
Yeah, I mean, yeah, I totally could do like, what's the next support after the one that we're on?
So
I think
let's
like,
write this right here. When this was here,
yeah,
you could say this right here was your KPI in the bottom.
yeah,
But um, the top, yes, the top would be right. Um, that, oh, come on. I need to pick a different color. So this one would be good, okay? But some folks could say maybe it's this one,
right, right.
right? Well, as far as a KPI, think in extremes. So the better one is this one because it means that the market can still come up like this and drop because this is your W being rejected. Does that make sense?
Mhm.
So your KPI as far as buys is this one. But look at this, it's also resistance. Okay, so this is a current one as far as, hey, market's about to drop kind of thing. Then where's your next resistance? Is this making sense? So
Yeah.
the point is that after it clears this one, it's going up. So if it breaks this, so this is your current KPI and your true KPI for your next one is this one. Okay, so the yellow, this was your current one, it's your 50%, but this is only your 50%. Does that make sense? So where's your next one? Well, the next one is where we're at right now. Why am I putting these in parentheses? Because these are minor.
Mm.
Because look at how prices went down already. Does it make sense? See, it passed through right here, you see, several times. These are minor KPIs. So this is not it. Yes, it is in a sense of, hey, if it market is dropping below this, I don't want to be in buys. I should be in sells.
Mm.
But this one is your next one. It's fresh. But look at how many times it's bounced. 1, 2, 3, 4, 5, 6. 6 times already. And compared to this one, 2. Well, you could call this one 3. So which one is your true KPI? That,
Yeah, the bottom one, I guess, the more extreme one.
yeah. So if you are in buys, the point is that you have up to here to fix. After that, it's just better to cut your profits, cut your losers, and sell to here. Now, if you're in buys and you're light, you can withstand this and you spread it out.
Mm-hmm.
Okay. So if you started trading here, let's say you're buying here, you buy here, okay, and you buy here. You see how close these are? And you buy here. This is probably your last one. And you could say this is, level 1, level 2. And then the next time that you should buy, don't buy here. Buy here. Because this is your last shot. And it can sometimes go a little bit out and then come back up.
Yeah.
Is this making sense?
Yeah.
Okay. But if you're buying like here, and stuff like that, you're gonna lose and you're gonna get bigger drawdown. You're adding to your risk until it hits this. Once you add right here, you reduce your risk. Because what happens is your break even, which is all the way up here, just suddenly drops like this. And now you're adding to exit, then you can reset. Okay. Then what happens? The market retests. And then if it really bounces, you can start adding buys lighter and make profit that way. And that's how you reduce your risk. Is this making sense?
Yes.
But this is if you're light. If you're light, then you can survive the drawdown. But if you're heavy, let's say you started buying up here, okay? You need to learn to cut your losses, right? And so let's say if you're buying up here, because this was where it was supposed to bounce, you bought right here, then you bought right here, you shouldn't buy here. The next time you should buy is here.
Yeah.
The next time you should buy is here. Do you notice how far apart it is? This is what I learned, that when I fade and I keep fading like this, I'm adding to my risk. I'm getting too heavy too soon. And I learned from Josh when he talked about fractals and 50%, when this, see, look, this move is a new 50%. You see that? This move right here, 50%. It mirrored. This is the fractal concept. Okay. Then look what else happened. This move would become the new 50%. And see how it's at the same level that could bounce. Okay. And then look at this. You see this move? 50%. Stretch it for a little bit, and what this now becomes is 62%. And this is your fibs. You will see the fibs all over the place. I hope I didn't confuse you by adding the fib in there, but the point is that if you start recognizing the 50%, you begin to notice where's your next KPI.
I think Dave has a course on 50%, right?
Yeah.
He has 2 courses. He has fractals, and the other is 3 and 50.
50 at the 50 on the 50.
Yeah. So these 2 courses, if you combine it, this is what I just showed you. Okay, because if you're taking this move right here and you double it, for this is 50%, and then you move it to the next pivot, this is your KPI. And this is how you see it. This is how you find it. Because once it passes this, we're not coming back. It might break out and come back. That's not the same thing. That's because that's a fake out. When it says break out, it means it broke out, comes back right here, and does not come back in, but comes back down and breaks this. So then your KPI at that moment is this pivot. Because the moment the market breaks this, it becomes a Nazari wave. And we're going for another, where this becomes now the 50%.
Mhm.
that clear?
Mhm.
That's how the market tends to move. So if it came down to here and it broke, you're gonna have an Nazari wave to here. And your next KPI is here at that point. This would be your current one or your previous at that point because it broke. And then your new KPI would be this down here.
I see.
So not even this. Yes, it could bounce right there, but I'm telling you, it usually goes to 2x. It bounces right here. Okay.
Okay.
So that's the whole concept of fractal, which is you measure it, and then you mirror it. Okay. All right, let's go to a different pair. CAD. Let's go to the hour. Now, where's your KPIs here?
Right. So yeah, this was kind of confusing for me because I feel like if price was lower, I would have drawn it like, no, it's a little high. Like,
Well, let's do the low one, the easy one first. What's your low KPI?
Good point. So the low one will be down here.
Yeah, exactly.
And then I guess like
What's your upper one?
Probably maybe here. That one I don't know. Kind of muddy.
That is it. Because by that time, it would have broken the channel. Okay, however you draw it. By the time it reaches here, it's testing and about to break the channel. Does that make sense? So when you first drew this one, it's not it because we are past it. You see this pivot and this pivot and this pivot, it's higher. It's not your KPI. It's your current price action as far as action point. Okay, but not it's not a KPI anymore.
Okay.
Does that make sense?
Yeah.
Okay. So it's these two right here. So I would say this one because this is your first right here. First pivot, some pivots here. You could say this one, but there's nothing here. See? And this was the top of these. So this is a more major one right here. That this is, it's a zone. It's really a zone. So your KPI you could say it's this zone.
Yeah, that makes more sense.
And that's what I learned from online trading academy, which is that it's a zone. Okay, now if you stretch it, then you could say that's your zone as far as the resistance.
Yeah, okay.
Because it's at the top, this one. Now, depending on how you draw it, you could, stretch it to here, or you could even go to here, and so it's based on how you want to short the market. So if you want to sell the market, okay, then you can say, hey, I want to sell here. I want to sell here. Maybe add a sell here, light, add here, kind of thing, and then see you later. Because by this time, it's broken 1, 2, 3. It's probably not coming back. Because at that point, if you fib this, look what happens. It's past 62%. Does that make sense?
Yeah.
Now, if you know about the 78, this is a better plan C. This is a better plan C right here. but it's really, really stretching it because you have cells down here that you really should have gotten out of, or you have to be super, super light to survive such a huge drawdown. Is this clear?
Yeah, yeah.
Okay, so the way traders, the way if you want to short the market, okay, what ironically, there's another guy named Trader Nick, again, but he talks about this, and this is what I learned in online trading academy as well, is maybe I want to short right here, but I don't want to do it like this because look how much I would lose, 76 pips.
Mm-hmm.
Makes sense? So
Mm-hmm.
then they would tighten their stop like this and say, hey, I'm going to short right here and I'll take a smaller loss, 30 pips. So if you're like 0.01 and 30 pips, yeah, you lost like 0.3. Does that make sense?
Mm-hmm.
You didn't really lose that much. Now, here's your next one. Well, I think this is a higher chance, and I'm going to short in this zone, which again is another 30 pips. And this time I'm going to be a little bit heavier, 0.02. So then it's like, okay, I just lost 0.06. So now between these two, I lost 1%, right?
Mm-hmm.
And then let's not say, here's the next one. I want to short it right here, saying, here's your top of the zone kind of thing. And then here's the 30 pips. Or you could maybe draw it like this, but it's not the best one. The better KPI is like this one. And all you have is 30 pips, right? Well, now maybe you're -2. Okay. But what if this works out right here? Then you just rode the wave in a turn, right? Meaning that this was a range. And so this right here could be, yeah, maybe -2 because you took some losses, right? So -0.3, -0.6, -1, so -2 or so, right? And then this could be 1%, 2%, 3%, or more
Mm-hmm.
with less than 1% risk. Is this clicking for you? Like how to apply the KPIs and how to do the swing trades and stuff like that?
Yeah, yeah. I think so.
Okay, so if you say think so, what's unclear?
Um, it feels like I think I'm having trouble with the difference between kind of like the mini KPIs and the bigger KPIs where like for example so we already crossed this one and then maybe
Yep.
I could draw the other one that we drew. So um so I feel like even though this big trend is down, I've crossed kind of like this miniature buy KPI, and that I'd be buy biased up till here, but that seems not right because I should be sell biased, but I'm on the other side of this line, something like that where it's like I'm seeing a lot of I think I'm like you mentioned earlier support and resistance like I think I'm thinking when I cross support and resistance I'm flipping bias, and I think when to flip versus when to just keep building is still confusing to me.
Okay.
Because I guess you could be in sells, you could start selling now, kind of like you said, but like really when to stop selling feels because in my head I think this is part of my problem. In my head, the higher up we go, the more probable the sells are, which isn't true. At some point, they become almost zero probability.
Well, just use the fib. Okay. So if you fib it,
Uh-huh.
You drew it like this. So I'm gonna clear my chart. I'm gonna fib this. So just, we'll take this last down. Okay, so not this one, because it pulled back pretty big,
Mm-hmm.
but let's just take it from here, right? And here. If you were to sell, where is your highest probability for sales?
For them to like, I mean, I don't know, maybe 32, 38. I mean, I just
The
picked that up.
highest probability for sales is 23.
Okay, okay,
Because if it cannot cross the 23, it's going to go down.
sure, sure.
Next probability is 38. Because if it cannot cross 38, it's going to go down. Does it make sense?
Yes.
Probability is getting smaller. And your next probability is 50%.
Well, where does
Cannot cross the 50%, huh?
how does being overextended factor in here?
Because the
Is that
market
just, is that like only in a single move that really applies?
no. It's
Like, because so like ignore, like, stepping outside of our example, just I'm just trying to talk about like where the mental clash is happening. I think like when we're trading and we see something going kind of like really far, it starts feeling more and more probable that we're going to get like a down leg. So I think I'm mixing up.
pullback. Yes, for pullback, for one price cycle pullback,
Uh-huh.
that's true. But as
I
far as
see.
direction and bias, it's not true.
Uh-huh.
The further it goes in one direction,
Mm-hmm.
the more the bias is for that direction.
Okay.
Okay, because like here, if the market went up like here,
Mm-hmm.
and it went all the way up,
Mm-hmm.
what do you think the market bias is?
Up.
Up. It came back down 62%, but guess what happened? Went even further up.
Hmm.
Does this make sense?
Yeah.
And look what happened. It went down. The farther it went down, yeah, it came back to 78, 62, went down even more. It changes the bias. The further it goes, the more the bias changes. Because the reason is that if you're in sales, you sells and you sells and you sells and you sells, guess what? People are going to approach risk out, or they're going to, hey, oh, I got to give up on my trades. And guess what happens? They exit.
Mm-hmm.
Exit their sells, which then pushes the market even further up.
Mm-hmm.
Does it make sense? So
Yeah.
the further it goes, the more the bias changes. The probability of a pullback is higher because the market can't breathe. It's like if I were to breathe out, at some point I'm gonna breathe in.
Mm-hmm. Mm-hmm.
Does it make sense?
Yeah.
Okay, but the bias as far as direction has changed. Okay, so like let's take this fib and I'm gonna start with this one. This move, see, this from top to bottom came back 62%.
Mm-hmm.
Okay, and then it bounced, right?
Mm-hmm.
And what happened? It starts making a lower low. So the way fractal the fib works, stretch it to the last one. Look at this, 23, bounced. See that?
Mm-hmm.
The other way to do it, the fib, is this, an expansion. It drew it backwards. 'Cause look, if I drew it the other way, this 23 right here is also your 127.
Right.
Okay, so that the way the fibs work, it mirrors.
Mm-hmm.
Okay, so fib will mirror. No, backwards now. So the point is that if I am looking at 23, the mirror of that is what? 78.
Mm,
Am I looking at 38? The mirror of that is what? 62.
okay.
Does it make sense? Okay.
Yeah.
Now, if you draw this, look what happened. Your breakout is at 23. It came back to 23 and never broke. So the highest probability is right here at 23. The further it goes up to 38 is less probability, but there's still a chance. Goes up to 50, there's still a chance that it can go turn down, right? Then it goes to 62, slight chance. Goes to 78, smaller chance. Goes to 100%, you're probably going to hit risk out.
Interesting.
So your probability as far as it turning is highest at the 23. So your probability is decreasing because the further it goes up, yes, it might turn right here for only a little bit. Yes, it might come back, but the higher probability of it going up all the way and stretching to here and it's higher now.
Yeah, that makes sense.
So the point is, if you're still in cells, a lot of folks are going to be flipping. They're like, I don't know if I don't think this is going to go down anymore. And they're going to get out of their cells. And what happens? They start buying and add to the momentum of it pushing up. Does that make sense?
Yeah.
Because when people take losses on their buys, they are automatically adding to the cells.
Right.
And then when they flip, it's the same thing. So this right here, if you, depending on where you fib, so let's say you just draw from the last one. You see how we're already approaching 62? We're probably not gonna turn if this is gonna break. You see how this is resistance? And it's also the 62. So you could call that the KPI, but that's for scalpers. That's for scalpers. So this is a scalper KPI right here.
Okay.
Okay. But not for swing traders. Because for swing traders who use longer time frames, they're probably drawing like this. And do you see how this also aligns to 23? But if it keeps blowing across it, if it crosses the 23, they'll probably still be in sell bias up until 38. Does that make sense?
Yeah.
So this is where the major KPI is. It's further away, but the point is if you're breaking this 23 right here, you probably should be in buys up into here because it's also your 50% of this move. Okay. Yeah. And then if the market goes all the way up to here to 50%, it's probably not going to come back. Okay, because what happened is that it broke out of this range and now it's back in the range.
Yeah.
and then it probably won't ever come back to this area. I mean, yes, it will come back eventually, but the point is
Yeah,
not for a long time.
yeah.
So that's why the KPI, as far as a higher time frame, this one, you're at one right now. You're at one right here. As far as the scalps, for your minute trades, okay, you're at one. Okay, I hope I didn't confuse you by showing that, but so here, it already passed one. Does that make sense?
Mm-hmm.
So the point is you should be in buys in this pair. You should not be in sells. Because the likelihood is more that it's going to come to here before it bounces.
Okay.
So that's why I said the KPI is this one, because you are past one.
Mm-hmm.
You are past one.
So when we say that 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 this is the KPI, but we're already in buys, what does it mean to get to that KPI?
It means beware that sellers are coming into the market. So if you're buying, you secure it. Don't be adding buys. Don't be adding buys at the top.
Okay.
So the point is, let's say you add buys up to here. You can add. That's fine. Add up to here. But by the time you're up here, it's high risk to add. Because what's happening as far as risk reward is more for the pullback.
Okay.
Is this making sense?
Yeah, I think so.
So KPI is where prices basically flips. Okay. Because you are past one right here, what is your next one? So this one was it, meaning that it could come down to here and bounce. It's a double bottom, right?
Mm-hmm.
But if it doesn't bounce, you should be flipping. It's an OSR at this point, and you should be selling. Does that make sense?
Yeah.
So right here, because there's a W right here and two W's, you should be buying. You should be buying up to here because it's going to have a hard time breaking this. It could ride all the way up because, 0, 1, 2, 3, right? It breaks 38 and goes to what? 50. It could ride all the way up. That's why you secure. And then, if it comes back and it stays above, yes, you could add at that point, but don't be adding right here. Don't be adding in that area. Because if it breaks the KPI, it's going to the next KPI. Does that make sense? But if it fakes out, then we're going back. We're going back. Does that make sense?
Yeah.
This was the KPI. Guess what? It's also your 50%. So if it comes up to here, bounces, it's likely to come back to this area.
Yeah, that makes sense.
So KPIs is about your next one, not your current one becomes the next one when it is for the pullback. All right, so let's have you explain to Jared the KPIs for the next one. So this is probably my favorite pair. USD yen.
Okay.
And you can draw my chart.
Let's see.
So start with the easy one.
It's so weird to me when we're kind of like in the middle of a structure. Because like, yeah, I know we said like we can draw the extreme kind of like way down here, but I feel like these in between are relevant, but I just
Or
don't know
scalpers.
what to do with. Yeah,
For
maybe that's
scalper,
what it is.
yes. But
Maybe
you
I'm mixing
know,
two
you need
together.
to know the extremes for the hourly swing traders and daily swing traders, because that's where major volume comes in.
Would you draw it this high up? Is that too high?
It's not too high.
Okay.
Because look how far this market moved.
Yeah, that's true.
200 something pips. So for this to go from here to here back, it's not high.
Okay. Yeah, that's a good
It could
point.
reach it in that one night. It
Yeah.
can go 100 pips in one night.
Okay. Let me erase this.
See, from here to here is what? 100 pips. That's
Yeah.
not high. It won't go in a straight line,
Yeah.
but it'll probably go like this. Drift, drift, drift. Does that make sense?
Yeah. Yeah.
Or it might, come up here, maybe bounce a little bit, come back down, bounce. But it could reach it. It's not a big stretch for the market.
Okay.
Clear my drawings. All right. So yes, these are your major KPIs as far as swing traders.
Okay.
Okay. So I'm gonna draw those lines in red because that's your swings. And now we're
Yeah.
going to drill down to the 15 or the 5, actually the 5. And now draw your KPIs for scalpers. So I'm going to clear your drawings. And
Okay.
where are your KPIs for the scalpers?
I would draw one.
And remember, look for consolidation.
Yeah, I'd draw one up here probably.
Yep,
And then I'd draw the other one, I guess, down here.
exactly. That's all it is. So that's where you were saying, hey, it's in the middle. These KPIs were relevant. And yes, you're absolutely correct for scalpers.
I see. Okay.
For scalpers. Okay. But right now, there is actually another one even closer.
Oh, interesting. On the bottom too.
Now, these are minors. So these are
Yeah.
your majors. These are your minors. I don't want to complicate, but the point is that because it passed through,
Yeah.
right? It passed, but it is a point where it bounced many times. And same thing here. You see that? Pivot here, pivot here, pivot here, kind of right there, close. So these are your minor KPIs. So the point is that if prices breaks above this, it's probably going to go up until like here and all the way up. I would put TPs right here.
Okay. Yeah.
For the market to stretch right here is harder. The market to get right here, it's easier. And right here is even easier.
Yeah, that makes sense.
Closer your targets are, the easier it is. Does it make sense? So
Yeah.
for the market, let's say to break this and hit this, that could be your 1/4%. And maybe you can stretch it for 0.5 and maybe here 1%. Now, if you want to risk more, then yeah, you could size it and maybe,
Yeah.
1%, 2, 3. But that's a risk because if it swings to this side, you have -3. It's exact mirror. Does it make sense? So
Yeah.
you're counting on securing your trades. Whoops. Let me. So you had a line here. Let me add this back. You had in blue. Ugh, come on. And then I'm gonna add this line blue and clear the drawing. So then so the point is that if this is your 1%, well, what's the mirror of it? Here's your -1. So you could be down here -2% if you're sizing for 2% up here.
Hmm.
So the amount you risk is also the amount you can get rewards. Now, if you secure it, of course, there's no risk, being that if you think, okay, here's the KPI that you build your buy position flip kind of thing, then it'd be 0.25% risk, maybe 0.5, right? For a 2% secured. And that by the time you get up to here, you're 0.5, right?
Mhm.
And then it goes to 2% overnight.
Mm.
Does that make sense?
Yeah. Well, how do you decide which direction is the easier direction for nighttime?
This is where I use Heikin-Ashi.
Okay.
Okay, so right now this is hard because this is a range,
Yeah.
right? You got range right here. See? So, and then
Yeah.
now you have your outliers.
Yeah.
Okay. So I use Heikin-Ashi because let's say this is your USD. I do a new chart. I'm gonna do my 4 charts here. Oh, didn't do it. So your USD, your USD, or no, sorry, use the yen here. So I'm gonna do 4 charts and show you how to read it much easier. Because here's the hour, right? And right now it kind of looks like up and down kind of thing, right?
Uh-huh.
Now let's say when I Heikin-Ashi this, what do you think this is at? Is it up or is it down?
Up, I guess.
The current hour is up.
Mm.
Now this here is the 15-minute. Zoom in some, see how it's like up and down, up and down.
Mm-hmm.
Now if I Heikin-Ashi this, what is it? It's down.
Mm-hmm.
The current candle right now is down. Sense? Now I do in 5, it's up and down, right? So it's basically range.
Mm-hmm.
But if I template this as Heikin-Ashi, what is it? Well, of course it's down.
Uh-huh.
15 matches, right? So the point is beware because the hour is weak. The hour right here is up, but it's weak. It's not a
Mm-hmm.
strong up like this.
Mm-hmm.
Okay. Now this is a W pattern right here. It went 50%. So I use hour as direction. So as far as this hour, my KPI, which you drew earlier, was right here, right?
Mm-hmm.
And guess what? It matched. Because if it comes down to here, this is no longer a green candle. It's a red candle.
Mm-hmm.
Does it make sense?
Mm-hmm.
You could say there's a tighter one, which is right here. And this is what I was showing you. Okay? The
Mm-hmm.
tighter one is this one, bodies. You see this pivot right here?
Mm-hmm.
And these pivots right here, boom, boom, boom.
Mm-hmm.
It's also your body.
Mm.
Because the moment it crosses this, I can't seem to go make it higher. The moment it crosses the body, this becomes a red doji. And the moment it comes down to here, it becomes like this weak cell. Does that make sense?
Yeah.
Okay, so the point is that if it crosses this and becomes my M and the hour is red, I should be in sales. Because now you have 3 charts aligned. You have hour down, 5 down, 15 down.
Oh, yeah.
And that is how you recognize bias, which
Mm.
means it's going down at least to here. Well, that is the hour. So let me zoom out, which means it's going down, breaking this one, right? To here,
Mhm.
to here, right here. The next doji area. Possibly here as a balance point, because it's top of the bodies. So the way you read this is that there is a supply zone right here. You could say this one right here, but it's really this. Okay, so if I do a new chart, why is it not showing me? Okay, I see why. Okay, so the point is that this would be the top of it, right? And then your next support, though it's minor, is really right here, where it could bounce. It can come up to here, bounce a little bit, but the point is, this is your KPI for
Okay.
scalpers. Okay. So if we look, this is an outside range. So for USD yen, it's actually safer to be on the selling side than it is to be on the buying side. Because if this is an outside range, it's probably going to go to the next one, right?
Mhm.
So if it breaks this area right here, where's your next KPI? You could say this one's a minor and this one's a major. Does that make sense?
Mhm.
So if you're in buys, you have to prepare for possible 220 pips against you
Mm.
as a swing trader. As a swing trader, they have huge drawdowns.
Mhm. Mhm.
Okay. Now, as a scalper, you cannot survive that.
Right.
Does that make sense? Which is why this is your major KPI and at an hourly.
Mhm. Mhm.
If it doesn't bounce here, it's much safer to be in sales and ride the wave down to here over the next few days or hours. Does that make sense?
Mhm.
But look at this. You have a 0, 1, and if it comes here as a 2, and it could actually come all the way to here.
Mhm. That makes sense.
Okay. So if you read as far as the higher time frame, the directional is down. But you see how it has to come up to here before it retests the trend, and then it might drop. Okay, so if you look right here, this has been up. And remember how I said this was the KPI? And that's why. It's also the trend channel. It's also your fib. Because if you fib this move, look at that. That trend channel right here is 62%. Right here is the bottom of the resistance, 62%. And it's also where it touches the channel. So when a lot of things align like that, that's your major KPI. And that's why I would say it's, for now, it's safer to be in buys up to here with the forewarning that if it can't break this area and it drops, get out, get out. Okay, so on the 1 minute, clear this stuff off. So you see here, this hour right now is up, which means it's probably going to break this and come to here. So if I want to be in buys, 65 pips. You see that?
Yeah.
It's not hard for the market to do that, especially overnight. So if you're trying to sell, you have to be able to withstand 65 pips. Or even here, 119 versus, here's my KPI, 13. Which one would you prefer? Buys or sells now?
The the buys. Not the 65 pip one.
Yeah, exactly. Because then you say, here's your zone to buy. Oops. Does that make sense?
Yeah.
And then if it fails, well, here's my next zone to buy. And these are minor, small losses. Okay. Being that if it comes down to here and it bounces, it's a great, like here's the range. Right? If it bounces here, you can ride it all the way up to here and get 100 plus pips.
Yeah.
Does it make sense?
Yeah.
But if you want to be in sales, you need to tighten your KPI, which is right here. So then you can say, well, here's my 26 pips in sales. And I need to build a position of this size for sales to ride the wave down to here or past it. So this is how you size it. You look at the opposing KPIs as far as the next ones, then you drill down, then you tighten your KPIs, and then those are your zones. Does that make sense?
Yeah.
So if you're going to be in sales, this is your plan C. Don't oppose the freaking 65 pips.
Yeah.
And then you're going to be in major drawdown. But if you take a loss and you spread it out 1, 2, 3, maybe you lost 1%, or maybe you lost 0.5%, whatever, right? But the point is you didn't lose big. You lost on a smaller amount that you can recover. Because if this is 0.5%, this is 0.5, this is 1, this is 1.5, this is 2% overnight. And that is great risk management. The market, this is your major KPI. Yes, you could call this one, but the easier target is this one for sure, but if you want to stretch it, this is the one. It's going to have a hard time breaking this because it's fresh. It's only hit once in a long time. So the point is when it comes to here, it's probably not going to break. Probably will come back several times before it breaks.
Yeah.
Is this making more sense now?
Yeah. I think it's
if you want to buy, you're going for this position. If you want to sell, you're going for this one, which is a 1 to 4, 1 to 3, maybe 4.
Yeah.
But at the moment, as far as the nighttime drift, it's up. And now look at this. Just this bias is down for 15. This is up. The M just got rejected right there. And hourly up. So if anything, it's safer to be biased and use the yen, given that this is your stop loss.
Yeah.
So you have two correlations. So that's how I use Heiken Ashi to help me with bias and direction.
Okay.
Okay.
Yes, sir.
So what's cleared up for you after our session?
I mean, I think like drawing the hourly KPIs at more extreme levels, like I think the confusion was around time, I think. Because like you said, I was getting pretty tripped up on because like you can zoom out on an hourly and basically see the daily or the weekly trend. And so
Sure.
I'd be tempted to draw a KPI maybe like 50% of that really, really long-term trend, which
So you're
that's
saying
really
like up
like
here.
yeah, like way up there, which is like
But it's
true,
too
but
far.
it's like yeah, it's like the weekly and it's like kind of irrelevant for scalping. And so that was really tough for me to kind of figure out which KPI was the one that I even need to be worried
Closest.
about.
What's the closest one?
Yeah, yeah,
And so the easiest thing is to look at pivots. Okay.
yeah.
So like right here, that's a scalping. This right here is a scalping KPI,
Mm-hmm.
right? But the closest one, yeah, you can draw it right here, but it's not fresh. So the major KPI is this one.
Yeah.
So
So
that
I
makes
think that's clearer now. Then and then like being able to go down, like having those in place made it where the 1 minute, 5 minute made more sense. Cause then when I dropped down, I could look at like kind of more short-term ones, but then still have the longer ones where like a couple long ones, not like 100 long ones, just
the
two.
point of these is these become your targets.
Yeah, yeah, right.
So the closer one is these two.
Yeah.
So if you're putting on a buy, you can TP one here, or you can go all the way, and here's your second TP. So T1, T2.
Mm,
So the point is to secure right here or right here that
mhm.
you could ride all the way. Maybe you put two trades on where one fixed, one fixed.
Yeah,
Does make sense?
yeah, yeah.
And the way I size it, because I want profit, right? Let's say if I have this and it goes 40 pips and I size it at 0.5, means I got basically 20 bucks or 200 bucks actually. Okay.
Mm-hmm.
But if this is 20 pips, and if I want to make an extra 200 bucks, then I need to double it and it'd be one lot. And that would be 200 bucks. Does that make sense?
Mm-hmm.
So then in this one trade, I made, let's say a quarter. In this one trade, I doubled it as another quarter.
Mm.
And then that's how I would reach, 50 or 0.5%. So I don't do the way David does, which is to ride for max, because if you put on, let's say 1.5 lots, right? And you
Mm-hmm.
wrote it to here, you got 40 pips. So of course you're gonna have more, right? You would
Mm-hmm.
have what is this times 6, 4, 6. You have $600.
Mm-hmm.
Does that make sense?
Mm-hmm. Mm-hmm.
So of course you're gonna have more profit. Now you also take more risk. So it's a trade-off. If you want to reduce your risk by saying, here's my bigger size one lot, and I take it off here, easier target, right? Which means why? Because if I leave on my 0.5, right, and it goes against me, I can survive the drawdown. And this is why David works to secure profits, because then he can allow it to go for max. Because then if it's 1.5 and it's secured, well, the worst is he got out at 0.25. Does it make sense?
Yeah.
But if you go up to here, you've got $600, and that's, more than 1%. It's more than 1%. It's like 3% or something. That's how he's getting his higher numbers. And then if it goes past it, all the way to here, that's how he gets his like 5-6%. The market just does something, whoa, what the hell is this?
Yeah.
Unexpected,
Mm-hmm.
but anyways, hopefully that helps you as far as how to size and how to plan your trades. So if you're planning like this, you can make a 0.25%, 5%, or not 5%, 0.5, 1%, but you need to size it properly for the risk, not for the reward. Don't size for the reward, size for the risk. Okay, so that's what Rex talks about. He sizes for the risk and saying, well, like here it's 100 pips. I don't want to take the full risk, so I will take half and say I'm gonna enter 1/4 of my trade here. I will have my 1/4 to be at 1/2, right? And here I'll be at my full trade, and then a half to be one, whatever his sizing is that he risks, right? And so then you can spread it out. Let's say, hey, I spread it out by quarters, 1, 2, 3 kind of thing, or whatever. You figure out how to mitigate your risk and spread it out. But overall, the concept is to, spread it. For me, I take extreme risk because my KPIs are super tight. Like I literally, that's my stop loss. And so I am scalping like this. And I take more losses. So what I've found out through my simulator is because I'm going heavier and paying these heavy commissions, I actually make less money. But if I just simply put on a trade, spread it, I make more commission. I make more money because commission kill the profits. So it was like, wow, that was a huge aha moment for me because for once I'm like, I actually prefer to be light.
Yeah. And then get more pips per trade.
More pips per trade to reduce the commission costs.
Yeah, that makes
I have a hefty $7 a commission. So for 2 pips, yes, I made $30, but I paid $7. So I only made $20.
Yeah.
Whereas if I just simply said, oh, well, you know what, I can get a 20 pip run, or I can get a 10 pip run, and I can be at 0.5, right? I'll make the same amount of money, but the commission is so much less.
Right. Yeah, that makes sense.
The commission is so much less that the net So if I had a 0.5 here times 7, that's only 37 cents. So I lost a 0.65 and I made the same 20 bucks,
Mm-hmm.
like 30 or whatever. So the point is I made 27 bucks. It was
Yeah,
more money in my pocket by less trades.
yeah,
That was like, wow. I'm having to readjust now.
yeah,
Okay, because I'm a scalper. I learned Sean's technique.
yeah, right.
Good scalp, and I preferred it. And then now I'm like, wow, you know what? But I can read markets to find these moves.
Mm-hmm, mm-hmm.
That's like, oh, okay, I can do this.
Interesting.
It was just um that was just an extra tidbit threw in there. But the point is, hopefully this has cleared up a lot of things for you. You know,
Yeah.
I would say keep practicing, and we'll review some more.
Okay. Well, thank you.
All
Thanks
right.
for taking the time.
Yeah, you have a good evening.
You too.